Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at Brevant.com/wins.
And welcome to Markets Now. I'm Michelle Brook with Brad Kooima of Kooima Varilek. Quietly mixed in the grains this morning. Hogs trying to hold on to some gains. The big news has been, or the big story has been, the limit down openings in live and feeder cattle futures in response to news on Friday. The Lexington, Nebraska Tyson plant is going to close. Brad, thanks for being with us. Let's analyze this. How big was this plant? Where are these cattle going to go?
Well, let's give it a try. Thanks for having me on, Michelle. I'll try to go through some of those analytics for you, understanding clearly that this is a market that probably can veer off the path of what fundamentals are. But your first question, they are listed to have capacity of 4,400 per day at Lexington. I don't think they've killed 4,000 for quite a while there. No. I mean, a lot of these plants have a listed capacity that exceeds what their normal daily routine is. So let's just peg them at someplace around 37 or 3,800. Another good question would be, well, aren't they opening a new plant down the road in North Plant? Yes, they are. They've been currently killing about 1,100 there a day, with the expectation that they're going to go to about 1,500 a day once they get to the first of the year. So I don't have an explanation, but I'm going to say it out loud because I do find it very curious. Why Lexington? Lexington is largely a plant that kills almost exclusively formula priced cattle. Obviously, Lexington is located in Nebraska, where in Nebraska we actually have record numbers of cattle on feed. The Packers got plenty of margin now since October 16 when we flipped it over here, and all of a sudden now they're making money. So a lot of the thing is, I don't have an explanation. I'm not a conspiracy theorist or anything like that. I think the reality of the deal is there's not enough cattle to go around. And so someone falls victim to that. It still is curious to me why I won in Nebraska, where there does seem to be a lot of cattle. But nonetheless, I looked back. The first thing I thought of was, okay, I remember Plainview. Cargill closed up a plant in Plainview, Texas on January 16 of 2013. The irony of that kind of strikes on me too, because 2014 was a huge bull market, so they kind of got out of the way in anticipating those tight numbers. And then, so I'm going like, well, what happened then? I remember it being quite volatile, but the volatility then compared to the volatility now, Michelle, is like, going to a Cub Scout meeting instead of what this is, the circus. So that time it broke about $6. The Cargill thing. Well, we did more than that here in 1 second this morning. So there's some reference points. I don't know how helpful it is. The reality of it is they still got tight numbers. There's not enough to go around,
Yeah, where do you think we find the next support here on the charts, or how low do we have to go to work this bearish news in?
Well, I'm guessing, you know that, and hopefully everybody knows that. A couple of things. Fed cattle, we're at 250. Okay, so we've got a $43 break already. That's a lot. Okay, even the Holcomb Fire, 7% price drop in price. If I want to do that, I'm trying to come at it from different angles. If you're going to do that kind of a maximum break like that, someplace give or take 200, sloppy figuring. Where were we 4th of July weekend before the thing really accelerated out of there? Some would say partly because of the Brazil tariffs. Well, we were just below 200 on fed cattle. We were just below 300 on January feeders. I hesitate to put numbers out there because it's a raw guess, because the market was not in great shape before the news on Friday afternoon. Who's kidding who? Cash market broke $10 in 2 weeks. We don't feel very current. We got record weights, blah, blah, blah. So, we were struggling to limping into this scenario. But it is Thanksgiving this week, and I'd like to think maybe we come out of it here by the second week of December or so. So let's say give or take 200 on fed cattle, and I hope I'm right. Could it get below that? Very easily, given the momentum of the market here. But it is trading a little bit today, by the way. It's limit now some of the deferred months are trading August, October. It's important. I would love to see us trade. That allows the people that have to get out, feel they have to get out, that you don't have that carryover selling into tomorrow.
Well, needless to say, we were all surprised with the Lexington, Nebraska plant, like you were. My question to you is there's been suggestions made that one of the large feedlots in that area switched over to the sustainable beef plant. Is that part of the reason?
You're asking me to speculate, which I guess is part of my job title, but I did reference that Lexington plant is largely a formula priced cattle killer. So if indeed if there's a shift in the relationship cattle, or the relationship they may or may not have with some of these large facilities that turn in the cattle to them, certainly it would have an impact. Any big formula, all spring, summer, and fall, any big formula price deal, you've seen an impact in the marketplace, in my estimation, in the north, given the fact that a lot of those plants, I mean, we're not making this up, a lot of that comes out of the south, right, where the tightness in supply at the south, right, because the border's closed. So it isn't too difficult to maybe connect the dots to think that could have something to do with it.
All right, so sustainable beef plant 60 miles away from Lexington. If you're not going to sell there, you're not lined up to sell there, where else are you going to sell in that area now?
The two Omaha plants, Schuyler, Nebraska. When I talk to these guys in the South at some of these conventions, they act like they're the only place that kill cattle. And actually, we've got more density of processing here in the North than they do down there. Dakota City, they pay some lip for service. Tyson does that. They're killing 32 hours basically at Dakota City the last while. Would they maybe consider gearing up? I think on last week's show, I talked about one of the tells and one of the clues I was going to be watching for is here when the slaughter picked up, because the Packers, like us, they're greedy too. And if they get their margins back, they're going to probably try to figure out a way to kill more. So notwithstanding the fact that Lexington's going down, let's watch some of these other plants to see if they pick up the slack.
And I almost forgot to ask you, Cattle on Feed Report on Friday got totally overwhelmed here by the Tyson plant news. It was actually pretty friendly, especially placements at only 90%, right?
Yeah, you're right. And you're also right.
Does anybody care is the issue right now, I guess.
Well, maybe not, but maybe it gives you something else to think about, right? Yeah, no, I had a whole bunch of the highlights and stuff here in case we wanted to talk about that. But it's the North. The North is the show. On feed numbers, Nebraska 104% of a year ago, Iowa 105% of a year ago. Placements, Iowa 106%. It's a good thing we're placing cattle. Nobody else seems to be. Also, huge marketings in Iowa, by the way, at 104. But yes, the overall placement number came below expectations again. Continue to be influenced by very, very small placements in the South. Texas at 92%, Kansas at 92%. And that's largely influenced, of course, by the border being closed. So, yeah, if it wouldn't be for that, I think you'd have probably had the back months go, quite a bit higher today. But as it is, maybe that's why the back months are trading too. August and October and December cattle next year are trading right now. So let's trade a little bit and let these guys out if they have to.
Yeah, and the placements, I think, were the lowest since the series began in 1996. So it was really bullish. So
correct.
Okay, so hog market trying to bounce this morning. What, just short covering or the $3 jump in the cutout values?
Well, you're kind of the master of the cattle hog spread commentary. I'm surprised.
Oh, that's right. I forgot about that. Yes, cattle hog spread unwinding.
Yeah. There are trades. There's a couple of algos that actually trade the cattle hog spread. It just slays me of all the things to trade. Hogs are, every market's hard, but the hogs really are hard. But yes, let's go with the fundamental, like the cutout taking a big jump. Maybe we're finally getting a little bit domestic pricing, a more favorable look in the aisle here, given the idea that how inexpensive pork is. There's a bit of a seasonality to that too, of course. But I have a tendency to step back at the hogs and go like, June hogs 94 cents. I mean, even years when we have way too many hogs, it seems like the summer hogs go to 100 at some point. I think the market's gotten beat up, overdone to the downside. I don't know if we're ever going to sell a pork chop again to China, but down here, I got to think that there's a little more room above us. So let's hope that we can sustain a little more life out of that pork product. That does seem to be the reason today.
So let's talk about the grain trade. Kind of nearly mixed this morning, but I think we took over 50 cents out of the soybean market last week, despite the fact that we had China business confirmed. We got another 4.5 million bushels confirmed this morning. How much more does the market need to start to get funds to come back and start buying here in this market?
Well, if ever one needed a example of the famous buy the rumor, sell the fact, how about this one on the beans? I know it's crazy. I have a hard time explaining it away, really, because it seems to me like, so the market rallied $1.20 a bushel, hoping that China was going to buy some, and then they started to buy some, and now we break 50 cents. So yeah, it's a little dumb. I feel like the market is set back here to a nice area of support, though. China is difficult because they're not reliable. They don't always do what they say. If they say black, sometimes you have to figure white. Okay, I mean they are shrewd. I'm trying to be polite here. However, I come back to a kind of a gut instinct of, if they're not buying pork from us, it tells me. And also their price of pork in their country is very, very low, which means they must have an oversupply, or that they're back on top of this whole disease problem they had for a couple of years. And I think they are. So I think, high productivity. So they got lots of pork. What they'll need to have then is lots of feed. So I got to think that this is only a start. And maybe it'll end when, the South America thing rolls around, but they're just planting, they're out of season now. So I think there's a little room up here, both more on the beans than the corn, but even a little bit of room from here on the corn.
Well, we're into support levels for both corn and soybeans on the charts here. We got to hold, don't we?
Yes, I think we need to hold right here. And I'm going to say that we probably will.
Okay. Thanks so much, Brad Kooima with Kooima Varilek. That is Markets Now.
When you choose Brevant Seeds, you don't just win. You win so big, the very ground beneath your feet cries tears of joy. You win so big that second place feels like a participation trophy. You win so big, you might as well be harvesting buried treasure. Oh, sorry, just one more. When you choose Brevant Seeds, you don't just win. You hit the damn jackpot. Don't just win. Win. Talk with your retailer or visit Brevant.com/jackpot to get started.